The question is, what is the expected price per ounce for gold and silver? Only then can the amount of ounces needed to pay off times your debt be determined exactly how much more debt they've grown.
Yeah.
Because, I do it globally because this is a global issue. So we need to know globally.
Yeah.
But I did it recently also just for the U.S. And instead of it being around 38,000 to 40,000, whatever that number was, it was something like $135,000.
Yeah.
The conversation centers on a simple but powerful idea. Gold and silver should not be judged by today's paper price alone, but by what they may be worth when debt, currency dilution, and confidence in the financial system finally collide. That framework turns the discussion away from short-term volatility and toward long-term purchasing power. Lynette Zang, a longtime monetary analyst focused on currency cycles and wealth protection, explains that the real issue is not just where gold or silver trades today, but what level those metals may need to reach to reflect the true scale of global debt. In that view, silver serves as practical barter money for daily living, while gold acts as the higher-level store of wealth that can potentially extinguish debt and preserve purchasing power during a major monetary reset. She points to conservative valuation work suggesting gold's fundamental value could be far above current nominal pricing, with U.S.-focused estimates rising from roughly $38,000 to around $135,000 per ounce, depending on the debt measure used. The broader message is clear. Metals are being positioned not as speculation, but as financial insurance. Now, we present the clips from Lynette Zang's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The question is, what is the expected price per ounce for gold and silver? Only then can the amount of ounces needed to pay off times your debt be determined exactly. And I'm going to let you start.
Yeah.
Go ahead, because you know how to do this.
Yeah, absolutely. So that's what our baseline is for the strategy, is what is the fundamental value of an ounce of gold and an ounce of silver. It starts with that barter position, knowing how much silver would be able to get you and your family and even your community through this period of hyperinflation, based on wanting to make sure essentially your daily life goes uninterrupted while the dollar collapses. That's what the barter position is for. And so we look at what is your personal expenses, how much do you have going out, and how much is property taxes, how much for insurances, things like that we look at, again, because the strategy is it's custom tailored to you. The next portion of that is the debt getting paid off. Mm-hmm. So according to what you have on your personal ledger, what debts you have, we then just look at that fundamental value, and we say, based on this is how many ounces of gold you would have to dedicate to paying off that fixed rate debt and getting debt free when they do that first overnight revaluation.
And that's today. When we're talking about fundamental value, we're taking a look at the level of debt versus the level of gold, and that's how we determine it. But it's extraordinarily conservative, because what that does not take into account are all the levels of leverage that are on top of that debt, plus all of the new debt that they will create in the future. So if we determine what the fundamental value is the day that you call in and set up what you need to understand that's a very conservative position. We don't know how much more debt they're going to accumulate, but the reality is desperate governments do desperate things, and that's the only tool they have, is more money printing. So to be very conservative with it, that's how we determine the fundamental value. By the time you're going to execute it, what might take 10 ounces today might take an ounce at that time, because of how much, in terms of, in this country, dollars, but this is true anywhere in the world, how much more debt they've grown.
Yeah.
because, I do it globally because this is a global issue. So we need to know globally.
Yeah.
But I did it recently also just for the U.S. And instead of it being around 38,000 to 40,000, whatever that number was, it was something like $135,000.
Yeah.
So if you're doing the calculation based on $38,000, but the true fundamental value in your country is 135, you're very, very covered in any outcome, because that's what we try and do. What if I'm right? What if I'm wrong? Let's cover both, so it just doesn't matter.
Yeah, absolutely right. Yeah, to go back to that OCC report for Q1 of 2026, how many derivatives are out there? How much debt?
We have no idea.
That's hidden. The way that they actually have these reports is it's designed to not let anybody know how much debt truly exists. And so, yeah, to your point, it's a very conservative baseline number that we go off of, but it's at least provable. We can at least point at that debt level at a global level and say, well, that's how much is published, and this is how much gold is in existence. So then you're right. If we're right, if we're wrong, well, in this case, if we're wrong and there's way more debt, then you're just in an even better position.
Exactly.
Yeah.
Maybe it'll take this 20th of an ounce of gold instead of the 10 ounces.
Right.
We don't know, but I've done a lot of studies on this over the years, and I did one, I don't know, I think maybe about 4 months ago or 5 months ago on real estate in particular, in a few different countries. But I've done this one, many, many times. And I'm always going to try and be more conservative, because if you have even more gold than that, booty hooty, Rudy Manooty, that's a good thing. I don't care about that.
Right.
Because the next step is to accumulate wealth.
Yeah, exactly.
The deeper argument is that governments have only one reliable response when debt becomes unmanageable: print more currency, suppress rates, and stretch the system for as long as possible. That may support asset prices for a while, but it steadily destroys the purchasing power of fiat money. In that environment, overvalued paper assets can become dangerous, while underowned hard assets begin to matter more. That is why the focus here is on function rather than hype. Silver is framed as the metal for continuity in everyday life, helping cover regular expenses during a currency crisis. Gold is framed as the metal for balance sheet repair, especially when fixed-rate debt can be eliminated after a major repricing event. The prediction is not built around a trading target. It is built around a monetary outcome. If debt keeps rising faster than confidence, gold and silver may eventually move sharply toward their fundamental value. Let's get back to the interview.
Why do you think all of these central banks have been accumulating the most gold ever?
Right.
The smartest guys in the room on money, they know what they're doing to their system. They know its true value is zero, and they know that's where it always ends up. So you need something to balance it. This won't balance it. Smart contracts, or rather the stable coins, that won't balance it. Those are dollars. Your only alternative is physical metals outside of the system. It's your only alternative, or that I can see. You do whatever you want, but that I can see. 33 different global sectors of the economy. There's always a buyer for gold, regardless of its price in terms of fiat money. Always a buyer for gold and silver. They've not been able to figure out or duplicate any of the properties. Well, they can duplicate some of them, but they can't duplicate the key qualities that both gold and silver possess. They've tried for thousands of years, the alchemists. They've tried forever. And even today, they cannot duplicate those.
That's right.
So, yeah.
Turning the lead into gold, right? It's like the oldest story that's ever been told, but they've always been on the search for how to get this, and there's just one way. It occurs in the earth, and there's a finite amount of it.
So it's God's money,
Yeah.
right? This stuff created by man. This stuff created by man. This stuff created by God.
Yeah.
Above man.
Right.
Stocks are no good to hold, only gold and silver. Well, look, You always have to do what you are comfortable with. Understand that my background is as a banker and a stockbroker. So I lived in those worlds and I'm very technical. And we have irrational exuberance in these markets. They are severely overvalued because whether it's real estate or stocks or bonds or cryptos, the central banks have targeted them, excuse me, for inflation and for reflation. Gold and silver, however, as sound money, has been suppressed. So it is severely below their fundamental value. It's undervalued, both gold and silver. Personally, I like to have the lion's share of my wealth in an undervalued asset that is in a long-term positive trend, and the least amount of my wealth in an overvalued asset or instrument that is in a long-term negative trend. What's the real trend? They'll show you the stock market. Hey, maybe by the end of today, it's at brand new highs. Right. And so the overvalued market continues to get even more overvalued while the purchasing power of this continues its march to zero. That zero is on the Federal Reserve purchasing power chart. Why is it zero? Because it costs virtually nothing to create this stuff, right? Officially, a bill, a $100 bill, is 9.7 cents to create. They sell it to you for $100. You got to work 100 times harder for it. But it costs them virtually nothing. When it's digital money, that's even cheaper. So that's really why fiat money has zero value, because it doesn't cost anything to make. And the easier and cheaper it is to make money, the more money will be made, the more money will be spent, and the less value that money will have. So when we go into this digital system, that money, it costs even less to create than a bill. And there's no limitations on how low they can push interest rates, which means how quickly they can eat your principal. If they want it invisible, well, they can go out lots of digits past that period. And so they can still eat your principal, but you don't notice it, right? That's the same thing with that 2% inflation target.
Right.
That's the level. I was listening to Christine Lagarde, the head of the ECB, on Bloomberg this morning, and they want inflation at a level that maintains their mandate of price stability. So that 2%. Wait a minute. If you and I are talking about price stability, are you saying that the price is stable if it goes up 2% a year in price? No. That's not stable. Stable pricing to me is that the price just stays the same over time. That's a stable price. It doesn't go up.
Right.
But for the central banks, their definition of stable price is that inflation is at a low enough level that you don't change your behavior.
Yeah, and the big question is, how do they arrive to that inflation number too, right? Because they can pull whatever metrics they want and they can change whatever they want to fit that 2%. So, we don't need to include housing in that. Why would you?
Or energy.
Yeah.
Let's take food and energy out. People,
who needs it?
It's volatile. It goes, but the pricing never really does go down. Or if it goes down a little bit in like rent, or if the price goes down a little bit in the gas pumps, what do you still have? You have higher and higher low pricing.
Right, exactly.
Right?
So the floor just got higher. Yeah.
Right. And you go, oh, okay. I had that conversation with Mimi once in the beginning when she started working here.
Yeah.
And we were talking about rents. And she's like, yeah, no, it's not so bad. I mean, the price of the rent went up. But then it came down. And I said to her, well, did it come down more than or back to where it was? And she goes, well, no. right?
Yeah.
But you're suckered into this false sense of security. You can't depend on governments or central banks to have your back. You can depend on community and gold and silver to have your back. Proven. Proven. If the USA has 261 million ounces of gold and the M2 money supply is $22 trillion, is each ounce of gold worth $84,000? Yeah, fundamental value. And I can't give you a lot of guarantees, but I can give you these two. Number one, I will show up and do the work. And number two, at some point, all assets move to their fundamental value. Period. End of discussion. So, yeah, but by the time they actually execute that overnight revaluation. And remember, every single central bank has a gold revaluation account. How much more debt have they grown? A whole lot more than any other gold finds that they may have, right? So yeah, in terms of dollars, but what do you think you're going to buy with those dollars by the time they go to fundamental value? Same thing as my $10 trillion Zimbabwe note. Nothing. All confidence will be lost. But 33 different global users, 36 different global users. It's just supply and demand dynamics. It's not rocket science. It's just supply and demand.
Yeah.
What makes this outlook stand out is that it does not depend on perfect timing. It depends on the belief that all assets eventually move toward fundamental value and that paper currencies, when overissued, always lose credibility over time. From that perspective, the biggest risk is not that gold and silver have no future. The biggest risk is assuming today's pricing still reflects reality in a world drowning in debt, leverage, and synthetic liquidity. The strongest prediction from this discussion is that gold's potential is tied to its fundamental monetary role during periods of declining trust in fiat currency. If confidence in paper money continues to erode, and central banks persist with inflationary policies and digital controls, gold could be repriced much higher than currently expected. Silver remains important for its utility in trading and as a potential gainer if all hard assets are revalued. The essential takeaway is to prepare, not panic. Focus on protecting purchasing power, ensuring liquidity, and owning assets outside of the traditional financial system. Remember, while currency can be created at will, gold and silver are scarce and may become crucial for wealth preservation. Share your thoughts in the comments below. If you found this analysis useful, please like this video, subscribe to the channel, and turn on notifications for more updates.